In this video, I'm going to show you exactly how you can use the Elite Algo toolkit to get a very high win rate in every single market, crypto, forex, stocks, and every single other one, as well as potentially achieve $10,000 or more in profits every single month using this toolkit. This will be a longer video, so make sure you sit down, pay attention, try to understand every single concept I'm going to talk about. And if there's something that you don't understand, make sure that you leave a comment down below in the video. That way we can help you answer it so you can become a successful trader. Okay, so the first thing we need to do is go ahead and adjust the settings of the Elite Algo toolkit to be the best, most optimized version of itself for the asset that you're looking to trade. So right now we are looking at USD JPY. This is the asset I'm looking to trade. One thing I want you guys to understand when it comes to trading is you should only focus on 1 to 4 assets at one time, because every single asset will move differently. So if you're trading stocks, for example, please only focus on 4 stocks. If you're trading crypto, focus on 4 crypto pairs. If you're trading forex, focus on 4 forex pairs, and then master the behaviors of those markets and assets so you can better understand exactly what's going to happen in the future so you can make better trades overall. So right now we are looking at USD JPY. And my first goal here is to make sure that I have the best possible signals on the chart that I'm looking at. Before I adjust the settings for the toolkit, I want to make sure that I'm on the proper time frame that I want to trade on. So right now we can see I'm on the 1 hour time frame. Now, something to keep in mind, guys, whenever you're trading, it is always easier to start off on the 4 hour time frame and then work your way down as you master each time frame. Swing trading is by far easier than scalping. If you're a new trader and you're looking to make good trades, make profitable decisions in the market, I highly recommend that you start off with swing trading. Once you master swing trading, then you can start using lower time frames. Go for intraday trading, like the 15-minute time frame, for example. Once you master that, you can get down to the 5-minute, maybe the 1 minute after that. The reality is, when you're trading the lower time frames, you have to be fast. You have to understand exactly what you're doing. That way, you can make very, very fast decisions. And unfortunately, to do that, you have to be an experienced trader. So it's better off, if you're a beginner trader, to trade the 4 hour or 1 hour time frame as you get better and as you understand exactly how the asset moves. Once you do that, you can hop on to a lower time frame. So for this video, I'm going to go ahead and show you everything on the 1 hour time frame or the 4 hour time frame. Now that we have the 1 hour time frame selected, we're going to go ahead and go into the Elite Algo toolkit right up here. And now I want to adjust the settings of the Elite Algo toolkit to give me the best possible signals on my chart. Now, as for the settings here, this is not the video where I explain what every single one of them do. We have a course video for that. Go ahead and watch it if you haven't done that already. That way you know exactly what every single setting here does for your trading. Okay, so how do I optimize Elite Algo to give me the best possible signals on my chart? There's a couple settings here that we can play with. We can play with the signal logic, which is either normal or pro scalper. We can play with the normal sensitivity or the pro scalper sensitivity if we select pro scalper up here. And we can also play with the agility right down here. Now, as we can see, I already kind of like what's happening over here, but let's try to go ahead and remove some false signals. So for example, we have this false signal right there that we want to remove. So let's see if we can do that and get better signals on our charts. Now, what we need to do in this scenario is we need to increase the sensitivity of the algorithm. So instead of 15, let's go ahead and try 20 and see what happens. There we go. We've removed the signal. This looks a lot clearer for me. We have a lot less false signals on our charts. But let's also see what happens if we change it to Pro Scalper instead. It looks relatively similar, but let's see if we lower the Pro Scalper sensitivity to try catch more bottoms and more tops of the chart. Is it going to help us in this scenario here? Let's see what happens once it loads. No, not necessarily. So we're going to go ahead and move it back to 3. And to be honest, I kind of like it a little better under normal. So I'm going to go ahead and keep it under the normal logic for this one. So now we understand that the best possible sensitivity for us would be 20 because the chart looks nice and clean and there is no false signals on the chart. Now that we understand this, we're going to do this every single time we want to trade. Every single asset, we need to adjust it for that asset. That's also another reason why we only want to focus between 1 and 4 assets at a time. But overall, this looks pretty good. I'm happy with the optimization of Elite Algo on this chart. Okay, so now that I have Elite Algo optimized on my chart, the next thing I want to do is understand the strategy that I'm going to be trading with. Now, when it comes down to strategy, there's two things that we need to focus on, and these are going to be the differences between a good trader and a bad trader. The first thing that we want to focus on is always trading in the direction of the trend. And the second thing we want to focus on is only trading during high volume hours. We need volume in order to make profit in the market. So what is trading with the trend? Let me show you exactly what that is. When it comes to trend trading, we need to understand that the market will move in three different ways. The first one being an uptrend that will look like this. The next one being a downtrend that will look like this. And then we also have a sideways market, which is like this. Now, what we want to do here is identify which type of trend we're in, and then we want to trade with the trend. What does this mean? Over here on an uptrend, we're only looking to take the buy signals that occur in these areas. We do not want to take the sell signals that will be up here. We are not looking for reversals. We are looking for retracements. This is very, very important. Why do we want to do this? Is because we want to trade with the majority of the money. If the majority of the money is going upwards, then we want to go ahead and follow that money. And if the majority of the money is going downwards, we also want to follow that money. So in a downtrend, we are not buying over here, and we are not buying over here. We are only selling over here, and over here. This is very important. And then we have the sideways trend. The thing with sideways trend, this normally happens when there is not enough volume in the market. So we are going to go ahead and completely avoid this sideways trend. We are not going to be placing trades up here or over here or over here or over here. We are going to completely avoid this type of market. So if this ends up happening on the chart and you identify it, then we are not trading. Now, the thing with trading is this is going to happen roughly 70% of the time. You're going to be like, but Eli, today I don't have any trades. There was no opportunities, but I really want to make money. The thing is, trading requires a lot of patience, and you have to understand that not every single day you will have an opportunity to make money. So how can we tell if the market is in an uptrend or downwards trend? Let me show you. So the first thing we can look at is how the candles are acting on our charts. We see that over here we had a high. This high then went down and created this low. Okay, then we ended up getting another higher high, and over here we got a higher low. Then again we created another high, and now we have a low that's been pushing upwards, as you can see. This would give me an indication that this would be a signal that I would be looking to follow, because now I understand we are in an uptrend and we got a buy signal. So we are trading with the trend over here. As we can see, the market is trending upwards. This is what I'd be looking for. Same thing with this signal right there. This is actually a signal that in real time I could be taking right now if I was trading, but I am not taking this trade right now, and I'll explain to you why in just a moment. Another way that we can tell which trend direction we're in is simply by looking at the dashboard. So over here, we can see that the dashboard is mostly green. This little green box on the 5 minute, 15, 20 minute, 1 hour, and 4 hours, these are all green. This is indicating to me that we are currently in a uptrend. Now, if we had, for example, all reds, that would indicate a downtrend. If it was more mixed, so for example, we had red, green, red, green, red, then I would be inclined to decide that this is a ranging market, and I do not want to be trading in a ranging market. Another way we can see if we're in an uptrend or downtrend is by using some of the overlays inside the Elite Algo toolkit. So for example, the Echo Cloud is a great tool that will help us decide if we're in an uptrend or downtrend. So once this activates on our charts, we can see that currently we are in an uptrend because the Echo Cloud is green, for example. Now that I understand what's happening with the trend, now let's talk about why I do not want to take this buy signal, at least not yet. The reason why is because there is low volume in the market, and there's also a fair value gap right over here. Let me show you exactly what I mean by that. So over here, if we zoom in, over here on our oscillator, we see that it just turned red. This is indicating to me that low volume has hit the market, and this is not a good time to trade. Another thing I'm also looking at is the fact that this candle is a fair value gap. It did not move up in a slow manner, it moved up in a fast manner. What do I mean by this? So notice how, for example, over here, this candle moved up in a very fast manner. There was no wicks that went back down to retrace and check if that price level was going to be held. So basically what this means is someone purchased a lot over here, and that's why the price went up insanely high. But what's going to happen is that there's always going to be a retest into a fair value gap. So for example, we see that over here we had a fair value gap with these 3 candles not being retested by any wicks, and eventually the price went back down to test that fair value gap. So over here, I'm assuming that the price is going to come back down to retest this fair value gap. And then if we get an indication of high volume, this could be a good time to trade at that time. Not yet. Just like over here, for example, we see that there was a small fair value gap that was formed. This little area was not tested. The price at this time was red volume. So again, there's no volume in the market. The price came back down to retest this fair value gap and then gave us indication of high volume, and we saw the price broke this high right here. This would have been a good time to enter a trade using price action, using the signals, using the trend, using fair value gap, using volume as indication to what we're supposed to be doing in the market to achieve a high win rate. Now that we understand the strategy, let me show you a few examples so you can better understand it. Before I show you guys the examples real quick, I took a small break from the last clip that I recorded just to wait and see exactly what would happen in a few hours once the price started moving again. And as we can see, the price went back down into our fair value gap as I expected. So from here, we see that it's starting to lose a little bit of momentum. We have a green candle starting to form here. We will see that the price might end up starting to go back upwards. And after this point, this then would be a good signal to take at this moment using the information that we have from our strategy. Not only that, we also see another fair value gap also right there, guys. This area right here has not been tested yet. So I'm assuming there's going to be a candle that goes up into this area, and then once it does, then we can probably confirm what's going to happen. Is this going to be a possible trade to the upside that we should take? And one last thing before I show you guys examples of signals we could take and we should take, here's an example of signals that we should not trade. And that's because, again, guys, as we can see over here, we are in a ranging market. We are in a sideways market, a market with very little breakouts happening on the chart. This is when we want to avoid it. As we can see, guys, we have our highs here and our lows here, and we can see that the prices are not able to break these highs that are forming and not able to break the lows that are forming. And we are looking again to break these levels so we can find an uptrend or a downtrend for us to make money. When we see markets like this, all these signals should be avoided. So for example, let's see you saw the sell, you saw the buy, the sell, the buy, right? You saw these 4 signals right here, and we did not see this yet. We should automatically assume that until this low is broken, until this high is broken, we are in a range and we should not trade. So this signal should be not taken, not taken, not taken, not taken, not taken. And even though this one did really well, this should also be not taken. Okay, so here's a little quiz for you guys. Now we see over here, we had a low and then a high, another low, another high. We were in an uptrend over here. We saw that the uptrend got broken by this downside. Okay, the trend cloud turned red, the time frames are majority red, and we got a sell signal over here. Now, based on what you see over here, should we take this trade? We also have green volume, so we have good volume in the market. Should we take this trade? The answer is no. Why do we not want to take this trade yet? It's very simple. We don't want to take the trade because we can see there is a very strong fair value gap right over here where the price has not been retested yet. So what's likely going to happen is the price is going to go back up into this area eventually. Maybe not right away, but eventually the price will go back into this area. And as we can see, there's also another fair value gap right there. So 2 fair value gaps indicating that the price may reverse into this area. This is very important for you guys to understand whenever you're trading. You want to make sure that the prices are moving properly and not too fast. If it moves too fast, like we see right here, and there's no wick back up to retest this level or wick back up to retest this level right here, then the chances are the price is going to go back into this section. And if we run the replay here, we can see, look what happens. That sell does not do anything. The price is going to end up stagnating, and then eventually, look what happened. they came back into this area right here. As you can see, the price went back into, we drew it a little too big, but right, you can see, look at that. And then if we continue, we can see that the other one also comes back into this area eventually right there. This would have been easily predicted by understanding exactly how price action moves and which one of the signals we should follow. Okay, so now here's an example of a signal that we should take and can take. So as we can see, guys, the market is moving upwards. Over here, we have a low, a new high, a new low. The volume is going upwards. We have a little bit of a resistance over here, but that is fine. Why is it fine? We have volume. We have volume. We also have our trend on our side over here. We also see that there is no fair value gaps in sight that we haven't went back to retrace to. So everything here looks good. What we could do to be safe is we can simply just wait for this resistance to be broken. Once it's broken, we can enter a trade, or we can enter a trade right now if we like. So what we would do is we would take our position size tool, we set it up right here on the buy signal. The stop loss goes below the last swing low, which would be right there, right? Or behind the order block if you have one. And then we simply just target a 1-to-1 risk reward ratio, okay? And then what we could do here, if we want to, we can set up another trade where we take a 1.5 risk ratio or a 2 risk reward ratio, for example. Really up to us. We can close half our trade over here and then move the rest to break even if the take profit is hit up here, and then we can wait for the next take profit. So as we can see over here, we would run this trade, price ends up breaking it. This would be our first take profit. This was hit. You can either close your entire trade over here or simply put your stop loss to break even and target this next high if it ends up hitting it. I'm not sure if it does here. Eventually, I don't think it does. It didn't. But we can see at least the 1-to-1 was hit, and we would have took some profit, and we would have also made a break-even stop loss. That way our risk went to zero, so we would not lose any money on this trade. That's exactly how this works. Let me show you guys a few more examples of good signals that we can take. Okay, here's an example of another trade that we can take. So we just got this sell signal. As we can see, we have red dashboard for the majority of it. We have a sell signal, we have green volume, and we see that we were making, it was a high, it came back, it broke this low. We're now starting a downtrend. We have a red echo cloud, and the only fair value gap I see in sight is this one right over here, and this one got retested over here when the price went back up into it and then came back down. So even though there's still a little bit left, this one got retested and it's pretty far back. So this gives us an idea that this trade could be safe to take. So over here, what we're going to do is, again, we're going to take our position size tool, our short trade. We're going to set the stop loss behind the last swing high. The swing high could either be right over here, somewhere in the middle of these two order blocks, as we can see, because again, this is where our swing high is. We also have this swing high right here. So if you guys want, you can make your stop loss bigger. That's really up to you. But again, we're not going to be nitpicking here too much. Then from here, we're simply just going to go ahead and take this trade, and we'll see exactly what happens. So what happens here, the price is going to go back up into our stop loss. We don't get taken out, but we get pretty close to our stop loss. The price ends up going back into our take profit. And as we can see, the price is just going to go down and hit our take profit right there. And just like this would have been another good trade that we would have taken, because we understand that we had volume at the time of the signal. We had a strong trend on our side. And again, there was no fair value gaps that would go against us in this scenario. All right, guys, here is another example of a good trade that we can take over here. So as we can see, we're looking at our chart. We have a strong uptrend. We have our lows, our highs. They're consistently getting lower and higher every single time. We had a little bit of a break right here. But again, as we can see, what we did is we had a big fair value gap right there that got closed off. This price moved too fast, and that's why the price went back into it. So this here would have been a false breakout. So this is actually not a breakout to the downside. This moved too fast, so we had a false breakout. The price is going to start going back up again. And we can see over here, we have green momentum. We have high volume in the market. Time frame is mostly green again. Green echo cloud. Pretty much everything that we want is looking pretty good. And again, we also have a little bit of a fair value gap right there that we can target with our trades. So what we would do here, again, simple, we take the trade, set our stop loss below the swing high, target a 1-to-1, something like this. If we wanted to, we'd simply take that trade and look what happens. We end up hitting our take profit right about here, guys. Here's another example of another trade that we could have taken. As we can see over here, guys, we're in a downtrend. We have a red echo cloud. The lows are getting lower. The highs are getting lower. As you can see, we have majority red on our dashboard. We have good volume on our oscillator, and we got the sell signal. Everything is looking very good for us, and there is no big or half decent fair value gaps within this chart that I can see right now that will tell me that the price is going to go back to retest it. So this right here is good as far as I can see. So we can go ahead and short this position. Again, we set our stop loss, we set our take profit, whatever we want to have the risk to ratio is, that's completely your choice. I like 1-to-1 or 1.5-to-1. And then from there, all we do is simply just take the trade. We take the trade here, and as we can see, the price is going to go back and start to fall in our take profit. Boom, we just made our money. Now, this is obviously all grade A chances. And the thing is, you should only be trading grade A chances. Only A++ setups. If you have 2 out of the 4 criterias, you should not trade. If you have 3 of the 4 criterias, you should most likely not trade. You should always wait for the entire setup plan to actually happen before you decide to take the trade. And that's how you're going to become a successful trader, when you're trading completely based off your strategy, logic, and not emotion. And that's pretty much it, guys, for this video. If you guys like this, you guys want to learn more about this strategy, you have any questions, leave them down in the comments down below, or message me in the Discord server, admin Koba. Other than that, guys, thanks for watching. And if you enjoyed the video, please hit that like button and subscribe. It really helps us and motivates us to keep making videos just like this for you guys in the future. Thank you, guys. Have yourselves a great day.